I'm a certified financial planner, and today I'm going to answer 37 of your questions about the tax-free savings account. First question, is it TSFA or TFSA? Don't laugh. This is a real misunderstanding that so many people have. It is a tax-free TF savings account, SA, so it's a TFSA. Now, what is a TFSA? Think of it just like a bucket to put your money in. It's an account that when you put your money in, you get some tax benefits. You can use it to save and invest, and as your money grows, when you eventually take your money out, you don't pay any tax on the income that's earned on it, any of the growth on the investments, any of your original contributions, none of it. When you take your money out, it's all tax-free. So the longer you let it grow, the more valuable it becomes. And I'm going to talk about the investment options inside of a TFSA as we get further on in the questions. So no, a TFSA is not an investment itself. You can put investments inside of it. Again, it's just a bucket. The bucket doesn't increase in value. The bucket is just the TFSA that you can put investments in. You might have heard of a high interest savings account, TFSA, at the bank or something like that, but that is not at a high level what a TFSA is. You can have a high interest savings account that holds cash inside of a TFSA, but again, the TFSA is just a bucket to hold investments or cash or whatever you put in it. So who can open a TFSA? Well, you have to be a resident of Canada, you have to have a social insurance number, and you have to be at least 18. In some provinces, you have to be 19 to open one, but even in those cases where you have to be 19, you will accrue new room from the time that you turned 18. So when you eventually are able to open it at 19, you'll have 2 years worth of contributions that you can start with. Now, you can open one if you're a US citizen but happen to be a resident of Canada, but I would caution against this. If you want to learn more about that, check out my podcast, The Canadian Money Roadmap, where I recently recorded an episode with a cross-border financial planner, and we get into all of the mistakes that you want to avoid if you are dealing with finances across the Canadian and US borders. Can you have a joint TFSA with your spouse? No, a TFSA is an individual account based on your social insurance number, so you cannot have a joint account with your spouse. How can you open a TFSA? Well, you can do that at a bank, you can use a financial planner, or any online financial institution that offers TFSAs. Many of them you would have heard of before, but there's lots of different ways that you can open up a TFSA these days. It requires a little bit of information from you, your social insurance number, a couple of signatures, probably digital signatures these days, and then pretty well you're good to go. So what can you hold inside your TFSA? Well, I mentioned cash before, and many people, raise your hand if this is you, you might have a $500 TFSA sitting at the bank somewhere because the teller told you that's what you should do with a TFSA. Yes, it's possible that that's what you can do with a TFSA. Should you do it that way? Maybe not, but cash is an option for something that you can have inside of a TFSA. You can also have GICs, you can have stocks, you can have bonds, you can have mutual funds, you can have ETFs. All these options are legitimate investments that you can have inside of your TFSA. Can you hold cryptocurrency inside a TFSA? Yes and no. You can't hold it directly, meaning you can't own Bitcoin or Ethereum inside your TFSA directly, but you can own mutual funds or ETFs that own those assets. Here in Canada, we were actually one of the first countries to offer such products in a mutual fund or ETF form. If you want to have cryptocurrency as part of your overall portfolio, using one of those products inside your TFSA is a legitimate option that you can use. Can you put as much as you want inside a TFSA? No, every year you get new contribution room based on your age. So the contribution room can be a little bit complicated because it has changed over the years, but you get new room after the year that you turn 18, and that new room shows up every January. So currently this year in 2025, the new room is $7,000. So if you're at least 18 this calendar year, you get $7,000 of new room. I have a few more specific questions about contributions coming up, so I'll leave it there for now. Does my unused contribution room carry forward? Yes, it does. If you don't use it, it just grows and grows and grows, and you can use it in a future year where you might have more money to invest. Does my contribution room ever expire? No, it doesn't. As we stand today, there's no rules against that, so it will continue to accrue until you use it or not. You're not required to use a TFSA at any point, so it's not a requirement, but it does accrue so that you can use it at a future date. Can my spouse make contributions to my TFSA? Yes. So there are no income attribution rules, unlike with RRSPs or earned income or anything like that with a tax-free savings account. So if you are a single income household, but you have two spouses, there is no rules against the spouse who earns the employment income to make contributions to both of your TFSAs. What counts as a TFSA contribution? Well, when you transfer money from your bank account to your TFSA, that counts as a contribution. If you earn dividends or interest inside your TFSA, those are not contributions. Those are investment earnings, capital gains, things like that. It is not a new contribution. So when you make an external transfer, so typically from your bank account to your TFSA, that's what counts as a contribution. What if my account grows beyond my contribution limit? Great, that's the whole point. So the contribution limit is just the limit of how much you can put in, not how much it can grow to. So currently, if you've been 18 for the entirety of the availability of a TFSA, so going back to 2009, you'd have $102,000 that you could contribute. But it's very real that if you've taken advantage of all of this contribution room over the years, that your TFSA could be worth double that or much more. So there's no upper limit of how much your TFSA can be worth. It's just the limit on how much new money you can transfer into it. And then from there, you can let the investments do the work. What happens if I overcontribute to my TFSA? Technically, the rule is if you have an overcontribution to your TFSA, you will have a penalty of 1% per month on the amount that's greater than your contribution room. So if you overcontributed by $1,000, you'd have a 1% penalty per month that it remains in your account as an overcontribution. Now here's where the gray area comes in. Oftentimes people make simple mistakes. So if it's your first time making an overcontribution and it happens to be by accident, you might get a letter from the CRA saying, hey, you've overcontributed by this much, take it out of your account and we'll move on. If that's the case, please listen and actually take the money out because they don't always give warnings anymore. They used to, and it was much more common in the early days of the TFSA while people were still figuring them out, but they've been available for over 16 years now. And so the leniency is less and less. Now, if you realize that you've overcontributed, you can take that money back out because what happens is when your financial institution reports the contributions in February of the following year, that's when the CRA knows about how much you've contributed and they can assess whether you've overcontributed. And so even if you might have made your overcontribution in March, you won't know till the following February that the CRA is even aware of your overcontribution, okay? So if you realize it, you can take the money out. You might still get a letter or even a penalty notice the following year. But what you can do is you can submit a letter of your own back to them and see if they'll be lenient with the penalty that they assess. If you show that you were aware of it and you took immediate action to correct it, and especially if it was your first time, they might be a little bit flexible on the penalty and they might not issue the 1% per month penalty in your case. Don't try to game the system and try to make a massive overcontribution and say, oopsie daisy, whatever, and try to gamble with your TFSA. The CRA can issue that penalty and they are not obligated to give any warnings or have any leniency on issuing that penalty. Okay, so if you're nervous about your contribution room, how can you find out your contribution room? Well, you can log into your MyCRA account. Here in 2025, there were some issues with updating those numbers, but my understanding is that they've currently been corrected for the vast majority of Canadians. So you can log in there and see what your contribution room is. Keep in mind, like I mentioned before, that the CRA does not receive updated contributions until February of the following year. And so if you're looking at sometime this year, that number on your CRA account will not be reflecting how much you've already contributed this year. Once you get to, say, January of next year, you'll have new room, so it'll increase by the new room, but it still won't reflect any of the contributions you had from the previous year. So you really should be keeping track of how much you're contributing on your own. But if you want to compare that to what the CRA has on file, you can find it in your MyCRA account. Okay, let's move on to withdrawals. Can you make a withdrawal tax-free from your TFSA? Yes, that's the whole point of it. When you take money out, you don't pay any tax on any portion of it. The income earned, any interest, any capital gains, your contributions, nothing. Any money that comes out of the TFSA is tax-free, and better yet, it doesn't even show up on your tax return. So because it doesn't show up on your tax return as some sort of income and then a credit or any garbage like that, it's super simple, but it won't impact your other income tested benefits like credits or old age security benefits later on in life. What happens to my TFSA room when I withdraw money? Okay, this is a great feature, but it's a little bit complicated. When you take your money out of a TFSA, you get that amount back as new contribution room the following calendar year. So for example, if you take $10,000 out of your account, come January of the next year, you have $10,000 that you can put back in. It is a high watermark principle. So whatever you've actually grown to and taken out of the account, you can put that amount back in, not just the associated contributions with that money. Can I recontribute withdrawals in the same year? No. If you have maximized your TFSA, you take money out, you cannot put it back in, or else you will be assessed that 1% penalty on an overcontribution in that year. Can I transfer from my RRSP to a TFSA? Well, technically you can, but there's no tax benefit of doing so, so you don't save the tax on the RRSP side. When you make a transfer from your RRSP to a TFSA, they count that RRSP transfer as a withdrawal from the RRSP, which counts as income in the year that you take it out. So there's no tax benefit of doing so. There's no loopholes of transferring between the two accounts or anything like that. Can I buy stocks in a TFSA? Yes, you can buy stocks. I'm personally not a fan of owning individual stocks inside a TFSA, but it is entirely possible. If you want to be an equity investor in a TFSA, I would recommend that you lean more towards using, say, an index fund or an ETF or something like that, where you can have a diversified portfolio that has exposure to stocks instead of picking individuals. And I'll get to my rationale in a second. Hey, if you've made it this far and you're not familiar with me, I'm Evan Neufeld. I'm a certified financial planner based out of Saskatoon, and I primarily help people to live fully and retire confidently. I do that through my financial planning firm, Cedar Point Wealth, where I work with clients virtually across Canada, but I also provide free financial education here on YouTube, but also my podcast, The Canadian Money Roadmap. Feel free to check out the podcast anywhere you listen to podcasts or my videos right here on YouTube. Okay, back to the TFSA questions. Okay, this next question is a little bit interesting. I got some of these questions from Google as ones that people are actually asking. So the question is, should I invest aggressively in my TFSA? The financial planner in me kicks in pretty quickly to say, well, you should invest based on your risk profile, your goals, and your timeline. Within those boundaries, I recommend a sensible investment approach as opposed to one where you're essentially picking lottery tickets. So I'd recommend you use a simple, diversified approach that manages costs as opposed to trying to pick winners and hope you really strike it rich. I see so many people trying to pick individual stocks as they say, okay, well, I should do it in my TFSA because if I really pick the right ones, then I won't have to pay tax on any of the growth. But that leads me to my next question. What if you have an investment that goes to zero inside your TFSA? Well, this is the worst case scenario because all of your contribution room associated with that investment goes to zero. You don't get that contribution room back. I worked with somebody who had been investing in penny stocks inside their TFSA, thinking they might strike it rich. And then eventually, when all of them went to zero, they lost all of the associated contribution room with that. And so in their case, that was over $60,000 that they'll never be able to use for TFSA ever again. So from that point, they only got the new contribution room, negating a massive benefit of using the TFSA over a long period of time. So diversification is something that I highly recommend. Use a boring approach. Use low-cost index funds. Use whatever you want in there, but picking individual stocks, especially penny stocks, and trying to hit winners, it might be fun, but the TFSA is not the place to do it. So what's the best way to grow your TFSA? Well, just the same way as any other investment, you want to give yourself the best odds of success. Since we don't know what the future holds, increasing your odds is the best thing that you can do that you can actually control. So what does that actually look like? From my perspective, that would be diversification, low costs, regular contributions, and time. If you can do those things, you'll have a great chance of growing a TFSA to something that's really powerful that you can use for your long-term income. Okay, TFSA versus RSP, which one is better? I'm going to give the short version of this because you could have tons and tons of videos on that. I would say that between the two, they are both really, really powerful tools for long-term investing. But RSPs are best used with a strong understanding of tax and your own personal situation. So if you haven't sought out personalized advice and put together a long-term financial plan that incorporates both TFSAs and RSPs, I'd probably be more inclined to use the TFSA first because it's harder to get wrong from a tax perspective over the long term. So it's not necessarily better, but it's less likely to bite you. So TFSAs are a great tool that anyone can use. How can I use my TFSA to retire early? For the vast majority of people, I recommend having a TFSA for retirement. It provides a lot of income flexibility and the ability to maintain your credits and many other income-tested government benefits. If you want to get into that more, I recorded an entire video on that, and you can watch it right here. Can you use your TFSA as an emergency fund? Yeah, you absolutely can. I don't recommend that people invest their emergency fund, so if it's just going to be parked in cash, using up your TFSA room might not be ideal, but if you have tons of room and you don't have the cash to maximize the plan, keeping your emergency fund in your TFSA isn't really going to matter. It's probably more complicated than it's worth because it'll affect your contribution room. So I'd recommend for your emergency fund, just keep it in a plain old savings account. Should I use a TFSA to save for a house or use an FHSA, a first home savings account? Now the FHSA is a bit of a newer account, but it combines kind of the best of both worlds between the RSP and the TFSA. Meaning when you make a contribution to it, you get a tax deduction, but then when you're using the money to buy a house, then you can take the money out tax-free, just like a TFSA. So if you know you are setting aside money specifically and exclusively for a house, I would say you should prioritize the FHSA. But if there's a chance that you might use it for other things, or if you say, maybe I want to buy a house someday, maybe I don't really know, you can maintain some flexibility by investing in the TFSA. And then once you know that you're going to be saving for a house, you can transfer some of that money over to your FHSA and get some of those upfront tax benefits there as well. Can I invest for my kids inside a TFSA? Well, you can. You got to do a little bit of mental accounting, so you can't allocate it directly to a child inside your TFSA, but for your own purposes, if you invest some money there and you say, okay, well, this is little Johnny's money, that's fine, and you can do that. Again, you can't set up a TFSA specifically for a child, so it will remain in your name and you get the tax benefits associated with that over the long term. Okay, getting into some other topics here. Can you day trade inside a TFSA? Well, this is part of that gray area, kind of no-fly zone of how to use a TFSA. This is not the intended purpose of a TFSA, and the CRA kind of puts day trading in the category of operating a business inside your TFSA. And so according to the CRA, some of the factors to be considered in ascertaining whether the taxpayer's course of conduct indicates the carrying on of business are as follows, meaning, how are they going to know? They're going to take a look at all these different things. So the frequency of transactions, the period of ownership, your knowledge of securities markets, security transactions as part of your ordinary business, how much time you spend on it, whether you receive financing for it, if you're advertising it, all sorts of different things that they can use subjectively, not objectively, subjectively to determine whether they think you're running a business inside your TFSA. So if you're day trading in there and you are one of the very small few people that actually can make money doing that, especially an unusual large amount of money, be careful. Because the CRA can then come back to you and say, actually, you're running a business in here and all of this is going to be treated as business income, not capital gains, business income. So all of it is income in a traditional sense. So without going down the rabbit hole of taxes and all that kind of stuff, don't day trade inside a TFSA. That's not what it's designed for. You don't want to play with fire in this case. So can the CRA actually tax your TFSA? Yeah, they can if this is the situation, and this has happened before. So you can look it up. You can find a few scenarios in the past where the CRA has deemed certain people have carried on businesses inside their TFSA and they have taxed them. So just like I said before, stay diversified, stay boring, make regular contributions, that's fine. You can even buy and sell some stocks in there. But if there is a high frequency of these types of transactions and all the different other factors that they could consider, that is when you can expose yourself to an audit from the CRA. Can I name a beneficiary of my TFSA? Yes, you can. When you pass away, a beneficiary designation allows that person to receive your money. And in that case, they also receive it tax-free. You can also name your spouse or common law partner as a successor holder. Now, what is a successor holder? Successor holder is someone who receives it and absorbs the TFSA into their own. So if you and your spouse both have maximized their TFSA and your spouse passes away, then you would have a double TFSA, both of your accounts now inside of your own. So like I said, that's only available for spouses and common law partners. So if you don't have a spouse or partner and you name your kids as beneficiaries of your TFSA, they will still receive the money from the TFSA, but they don't get that same benefit of being able to take it over. So can my kids keep my TFSA after I die? Like I said there, if they are named as beneficiaries of your TFSA, they will receive the proceeds of your TFSA. They cannot then roll it into their own TFSA directly. If they have room, they can receive that tax-free inheritance or being the beneficiary of that account, whatever the proceeds they receive, they can take that and make it as a new contribution into their own TFSA, no problem, but there is no opportunity to roll your TFSA into their own directly without making that distinction between what was yours and now what is theirs. How much can I make inside a TFSA without paying any tax? If you are using your TFSA to accrue investment income or investment growth over time and you have a big pile of money inside your TFSA, there's no amount that is too much before they start taxing you. So it's more so on how you operate during the accumulation years that determines whether your amount will be taxable or not. And once you get to your retirement years, or if you want to just start living off your TFSA, you can start making regular withdrawals out of it and you can treat it kind of like a tax-free paycheck that comes into your bank account. It's pretty great. What happens if my TFSA investments lose money? Well, if they go to absolute zero, you don't get that contribution room back. But if they decrease in value, that's just part of the investment process. So there's nothing that needs to happen if your investments decrease in value. That's going to happen, especially if you're invested in the stock market, even through index funds or mutual funds or something that's really well diversified. It will ebb and flow over time and change in value, but nothing changes in terms of your contribution room. The biggest issue is when you have an investment that absolutely decreases in value, say a stock gets entirely delisted, and now that investment has no opportunity to increase in value ever again, and you've just lost that room forever. Can I live off my TFSA in retirement? Yeah, absolutely. If you have enough time and contributions and investment growth to have that be worth a significant amount where that is the income that you need, by all means, you can do it. There's no limitations on that. You just need all of those things, the contribution, the time, and the investment growth to have it be a sizable enough amount of money that it's realistic for you to live on. Can I use my TFSA well on EI or disability? Yeah, so your TFSA will not be part of any income tested benefits. There are some niche programs that have asset tests. These are often disability programs where you have to report what assets you have. And so a TFSA would form part of an asset test for any programs that require it. But for income tests, it is not part of that. So it will not show up. Do I need a TFSA if I already have a savings account? Well, these are two different things. A savings account, from my perspective, is something that you would have at your bank where you can just park some money for your next vacation, your next car, your emergency fund, and things like that. Your expectation for your savings accounts are to know how much money you have, not to necessarily see it grow significantly over time. The best way to use a TFSA is to have it grow over time. And so if you can definitely have both, even though there's a savings account in the name TFSA, if you want to use it for long-term growth and some of your goals that are further down the road, having both a savings account and a tax-free savings account to meet different objectives can be a really great strategy. Well, that's everything that I had on my list for now. If you stayed with me this whole time, thanks so much for watching. Whatever questions I missed, please drop them down in the comments. there's any more detail on any of the specific questions that you want more specifics on, again, put that in the comments and let me know. I'd be glad to make another video. Thanks again for watching, and we'll catch you on the next one.